Hey guys, it's Charlie G. I am back again. Today I want to talk about how do you spend your tax return money. It's a lump sum of money that we all get back usually because we overpay taxes throughout the year and we get back a decent amount. So the IRS give us a good portion of that money back. Some may be less, some maybe have more. It depends on how much you paid and what your current situation is like. For me, I usually get a pretty decent amount because I claim losses against home, business, all these things over the course, and I pay a decent amount as well. So I'll get maybe a third of it back I've paid for the entire year. What should you do with that money? Do you go shopping with it? Should you go and pay bills? Do you pay more of the house? Do you make more car payments? Do you save it? Do you give it to charity? Or do you buy a car? So I'm going to explain some of the benefits of some of these examples and how you can use it to advantage, as well as how I spend my tax money. I'm going to share my experiences. So if you spend all of it on shopping, that is a no-no, because that money is a one-time money that you get for the year, and we have to put it into good purpose and use. Unless you're going to school and you have to make a need expense for a computer, some books, then yes, that's completely understandable. When I was a student, my tax money was maybe $2,000 to cover my books, computers that I need. And I just had enough to just pretty much get all these things out of the way. But other than that, if you're not in school and you're just employed, do not spend all of it on just shopping for yourself. Get these new latest sneakers, these new latest gears. You're just throwing all of it away in a sense. We have to really learn to shop for needs. Like if you have to spend all of that money, ensure that it's all for a need. A need means it's an absolutely, I have to do this, no shortcuts. If I don't do this, I cannot move forward. I can't keep going with what I need to go move forward with. So you have to ensure that it is a need. I asked a lot of my female friends, what do they consider a need to be? And shopping always come up on their list because it gives them a sense of feeling good, like they have to do it or else they don't feel good. It's just in their DNA to be shopping, and it gives them a sort of comfort, I guess, or satisfaction. Not all women are actually like this. Some of them are very conservative with their money and how they spend. They don't really spend it on shopping like that. But a good rule of thumb is try to set aside no more than 25% if you have to for shopping. Unless it's a necessity, it's a really harsh need, then yes, you need to spend all of it on overcoming whatever obstacle that you're dealing with. To pay off bills, it all depends. If it's just a short term or a small amount, then yeah, go for it. On a credit card that you took a loan against, or whatever loan you took off, and it's a very small amount, it's not very substantial, then go for it and knock off some of that payment away. But do not spend all of it on just paying bills. If you have a very high loan value, it's really not worth it. Continue to make your small payments the way that you have been making it. Good rule of thumb is try to not set no more than 20% of your refund towards these credit card payments or high loan payments that you have to make. And the amount that you pay, it should be substantial enough. So let's say you owe $5,000 on a card or any type of loan. So let's say you owed $4,000 and your refund was $5,000. You could set aside 20% of your refund, which is 1/5 of the $5,000, $1,000, to pay off that substantial amount off the loan or the card, because it will knock off a quarter of that $4,000. However, if you owed like $15,000 and you would only be paying $1,000, it really wouldn't make much of a difference. Like your monthly payments would have been reduced, but you wouldn't be able to knock off much. There's other and better things that you can put your money aside for to save you more money in the long run. And this can apply for a car or mortgage. And I know you're wondering, like, what? Why shouldn't I be paying off my mortgage and car payments extra? Like making these extra payments towards my principal will reduce my time. But it's all about saving. The goal that you're trying to achieve when you pay more of your principal, make those extra payments, is you're trying to save money. And there are better things you can do instead of making those extra payments to save money. I'm going to explain why. So let's say your house is worth $300,000. You put 4% down, so that's $12,000. Your interest rate is 4%. Your property taxes is $4,800 a year. so that's $400 a month. Your homeowner's insurance is $1,500 a year, so that's $125 a month. The total amount of interest that you'll be paying over the course of those 30 years is about $207,000, which is more than 2/3, right? We want to save as much as possible on making that full amount of payment. Now, let's say out of the $5,000 of the refund that you get, you put $2,000 aside to making those extra principal payments over the course of the 30-year mortgage that you're supposed to pay. You would actually end up paying the mortgage 6 years early. So you would be saving $43,000 out of that $207,000 that you're supposed to pay, right? It's still a lot of money, but let's see a better way of doing it. Now, let's say for the 24 years that you're supposedly would be paying this mortgage, if you are making those extra principal payments, instead you put $2,000 towards your mutual funds, a mutual funds account. You open one of those. That number comes out to be $126,000. It would profit you $76,000. So you would be profiting $76,000 if you put $2,000 a year for 24 years. So it's up to you. Would you rather save $43,000 or $76,000? And the banks don't tell you this, but it's just a much better way of saving instead of putting it towards more of the principal. And you have access to the money. If you have to withdraw, something happens, you have complete access to the money. You don't have to wait for it. You don't have to liquidate part of your house, refinance, none of that. It's available to you. Same goes for a car payment as well. So let's say you bought a car for $20,000. That's how much your loan amount is. Your monthly payments would be about $320 a month. If you pay an extra $2,000 a year for the car payment towards the principal, you would only be saving about $1,200 in interest, because car interest is not as bad as a mortgage. However, if you invest that money into a mutual fund, and let's say the return is about 7% every single year, and let's say that the return is 7% in compound interest over the course of 6 years, you would have $17,000 after those 6 years. So it would translate to $3,300 in profit. In other words, do you rather save $3,300 or would you rather save $1,200? I don't know about you, but $3,300 sounds much better to me. So that's the one I would definitely go forth with. One of the other options I mentioned earlier is you can save the money as well. But if you're saving the money, don't let it sit in the bank. It's just collecting dust and you're losing out because of inflation. Your money devalues. The more you let it sit in the bank and don't move, the interest that they give you these days is nothing at all. You're not beating inflation. So your money's being devalued. Your best bet is to always put it towards a mutual funds or some stocks. If you're not as experienced of an investor or stock trader, then just go with the mutual funds because it just steadily grows and drops with the market over time. And over time, the market always goes up. And it may not be that you put it towards a stock or mutual fund right away. You might have to let it sit, wait for some time, because you want to get in when the market drops down a bit. Charity is always a good thing to give to because you get a tax write-off for the following year. It's tax deductible. Sometimes if you file your taxes early enough, I believe the first quarter, you can actually get the deduction for the previous year. And I usually wait to give to charity towards the end of the year because I'd rather profit off the money that I have for the year, throughout the year, and then wait till like December or even January and make that donation. You can definitely renovate your house because the renovations that you put towards your house is towards the lifetime of the house. You will constantly be upgrading your house, but I wouldn't spend all of it. Instead, maybe half, unless it's a very harsh need and necessity and you have to make certain repairs and renovations, then definitely I understand. Go for it. Buying a car, yes, it's okay, but try to put the least amount down that you have to and make those monthly payments. As I explained, I showed you how much you can save if you instead put that money towards a mutual fund. So make your monthly payments instead with the least amount down as much as possible. It's better to pay $2,000 over the course of 10 months instead of right away. Why? Because of inflation. Like if you were making a monthly payment on a car, let's say it's $200 a month now, in 10 months, the money is going to be devalued. So technically, you're going to be paying them, just as an example, like $190. Like the money might devalue to be $10 less, meaning you would have to pay them like $210 a month to make up for that inflated amount, but you don't. So if your amount of payments that you're making is consistently the same, you know, you're actually saving $10 right there, because instead of paying them $210, you're paying them $200. That is because of inflation. We have to pay more in the future in order to make up for the current amount that we're paying. And this applies to any monthly payments that you make. What I do with my return, actually, I completely save it towards stocks and mutual funds. Usually I have a 70-30 rule. So I'll put 70% towards stocks because I kind of know what I want to buy. I kind of know different things I want to invest in, and I wait at the right time. I transfer to my Robinhood account, the 70%, and then the other 30%, I let it sit in my bank account until the right time to execute and purchase the mutual fund when the market I know is down, and I go in right there. And then by the time that it's going back up to its normal levels, I had made some profits. Those are my practices, and I'm just sharing my experiences. It may not work for you. It may not be something that you want to do. You may just want to make those extra payments because that is probably your way of saving. That is totally up to you. I'm just sharing my experiences because this is not something that we're taught in schools. We're not taught how to manage our money better, how to not give the bank most of our money, how to beat the system. You know, it's all these things that we're not taught. And it's good when we share our experiences, because that way we can pass it on to our friends, our families, our kids, our next generation, because that's how we build and grow our wealth. Like, let's not be part of the system where it's the standard way of living. Like, let's beat it, let's build. And that's my drive for sharing my experiences with you in terms of what do I do with my tax money. So I hope you found this video pretty useful and interesting. I'd love to hear about your experiences and how you actually invest or spend your tax return income money. So please let me know. Subscribe if you haven't done so already. Share your comments and thoughts. Until next time.